In the meantime, Class B shares of Berkshire Hathaway jumped briefly to an all-time high in the morning trade after this conglomerate reported strong earnings growth for the fourth quarter. Cathy Seifert's with us, Vice President at CFRA Research. A lot of cash on hand. Pretty exciting. Warren Buffett had a lot to say to the shareholders. Your thoughts and takeaway from this weekend's findings and obviously letter to shareholders too.
Yeah, sure. Hi, Nicole. It's good to be with you. There was a lot to unpack in, both the letter and the earnings. Starting with the bottom line, earnings were strong. I mean, considering the number of challenges, revenue was almost 21% revenue growth for the year, which for a company the size of Berkshire is very impressive. The insurance franchise and the reinsurance franchise continues to be a growth vehicle. The shares are down this morning. I mean, I think part of the pullback, the stock has been strong year to date. The S&P is down a little, but I also think investors are sort of mulling and weighing the impact that Pacific Corp's wildfire liabilities may have on the company. It's a pretty significant liability. It's not a material adverse impact on Berkshire, but I think that may be weighing on the shares this morning, which kind of masks an otherwise decent year for the company.
Yeah, and I know he began this with a tribute to his longtime partner, confidant, friend, Charlie Munger, and obviously a good point there. And may he rest in peace. Buffett is 93 years old, and his $900 billion company plus is a fortress, he said. Berkshire is built to last. But try to giving investors sort of this hold off, don't think that this stock is going to be a high flyer. I mean, if someone were to buy into Berk, would you have a buy rating, right? What should their expectations be? Yeah, tell me their expectations, because, I mean, this is not going to be a high flyer, but it is built to last, in his words.
It's not going to be a high flyer, but my sense is revenue growth is going to be 12 to 18% next year. It could be higher if they do an acquisition. And, I think part of the letter was Buffett's way of sort of, telling investors, curb your enthusiasm. We're a huge company. We're not a growth vehicle, but we've got a strong balance sheet. We've got plenty of cash. He also tamped down a number of expectations or speculation that were sort of, kind of playing out in the media, whether or not they were going to acquire Oxy. He sort of emphatically said, we're not acquiring Oxy, nor are we outright acquiring the Japanese trading houses. They're just good investment vehicles. I think there is a source of frustration that the M&A environment is very competitive. Nothing's cheap. But I also think that they will find deals. They're not going to be needle moving deals. Given the size of the company, it's really hard to move the needle, but that doesn't mean they're not going to still be out there doing, selective bolt-on acquisitions, as well as selectively buying back their shares. Again, they don't pay a dividend. That is kind of a big knock on the company, but that's their capital allocation model.
Right. Also, the succession plan, something you have in your notes. And of course, when people are up in their years with a lot of wisdom in their 90s, people want some more clarity. And you had talked about Charlie Munger making that slip about Greg Abel. And do you think people would be happy with that kind of transition? Is there anything more pertaining to the succession plan that you'd like to add here today?
I think that come May 4th, when they have the annual meeting, I think investors are going to be really attuned to see, who's visible and who's speaking. And one of the points that Buffett made in the letter was, come join us in Omaha, where Ajit, Greg, and I will be on the dais taking your questions. Berkshire actually has a pretty deep management bench, a couple of layers or levels down from this team. I think it would behoove them to sort of amplify how deep the bench is.
Yeah. And just the final thoughts here. I mean, I saw your pie chart that you had there, and you mentioned insurance and reinsurance in one area that has done well. Is there any allocation that, and not doing Oxy all the way? I mean, he made that pretty clear. Is there anything that you think that they maybe should change, or you generally like how they have this? You could have economic sensitivity throughout this year if you also have the Fed cutting rates. I mean, I don't know. Let's see do we get the soft landing? Do we get a recession? Big picture, final thought?
Yeah, there's a lot of puts and takes at Berkshire, but I think at the end of the day, the core insurance franchise has some really positive secular growth trends. I think Geico is at a strategic inflection point, so we should be mindful of, the direction that takes. Investment income may not be as high, but I think some of the economically sensitive businesses where margins have been hurt by higher input costs could see wider margins if inflation continues to ease. Overall, I think the shares are poised to outperform.
Yeah. It's great to see you. Thank you so much. Cathy Seifert of CFRA.